Hi, good evening everyone, and welcome to our Trading the Markets from a Professional's View here at Intelligent Trading Academy. And we'd like to welcome all of you to tonight's presentation, and we look forward to sharing our experiences and, from my point of view, my 30 years in trading. Hopefully you can all hear me. If you can't, just check, if you do get any problems, please just leave us a message and type them in the chat box. I'm happy to take any questions that you have during the session. Probably will last about 45 minutes. Without further ado, we'll crack on and see how we get on. So I said a nice webinar tonight. My experience from a professional is, what gives me the right to teach people and show you what we do. Well, I've got, here at Intelligent Trading Academy, we have over 40 years of combined professional and institutional trading experience. Have had professional fund manager experience, and definitely myself and the other trader and partner here, Kevin Warner. We were government-backed and recognised trading educator. We've got continued professional development accredited courses. We very much look at an institutional approach using simple and structured trading strategies, and we feel that they are effective, professional and consistent. We've taught over 500 plus individuals, and it's very important to understand how we look at the markets and how we trade before we come on and become full-time traders. We're trying to provide a community of professional, supportive and like-minded individuals providing trader education and mentoring, and we feel that is second to none. Our programs focus on the key areas: psychology, risk management and trading strategies, and our global community of traders we have in multiple offices. So who am I? I'm Adrian Slack. What does MSTA stands for? That stands for I'm a member of the Society of Technical Analysts. I've taught at that institution at the London School of Economics, so I'm well versed in our terrain and the analysis that we look at. CFTE means I'm a certified financial technician, similar to the MSTA, but just another badge, so plenty for me to get my teeth into when we're teaching and trading certain delegates and partners. So I've traded for over 25 years, some of the top investment banks, Credit Suisse and Societe General. At Soc Gen, I traded for 15 years, 2 years I run the FX book for them in cable, so that's sterling dollar, and I did 12, 13 years running an equity book as well, which was a very good for volume, very good for the size of the book that we handled. Those accounts, they could get in excess of 250 million. So that was a good background for me, good way of learning. Sat with some very good traders and it really got to grips with my risk management and how I got myself disciplined to find a consistent return and a consistent approach to how I structure what I wanted to trade and when I wanted to trade it. As I say, fully qualified technical analyst, very experienced in risk management, educating, and as well trader mindset. My mindset's slightly different because I've seen the bigger picture. So some of the bigger tickets that I've written, your mindset does get a bit blurred sometimes. When we're retail traders, as we are tonight, we must be very disciplined in our risk management approach. We don't want to, overcommit our capital. So that's me. I'm the owner and our other director, Kevin Warner. He's done our opportunities through his manual analysis techniques. He's worked within the wealth management, IDBs, proprietary trading companies, run some big funds, worked at a nice company out in Australia and consulted with them. He's qualified in investment risk and taxation, and again a qualified technical analyst through our ITAD. And again, experienced in risk management, technical and fundamental analysis, psychology and mindset. We'll talk more about technical and fundamental analysis as tonight's session progresses, because it's very important to understand the difference and how we can incorporate them by in our trading to give us a higher probability of a successful trade. Obviously, there's no guarantees, but what we will look at will teach you some techniques where you're going to be a little bit more stable, at least while you're learning, because obviously what we don't want to do is see clients blowing up accounts just because they're having a bet. This is not a bet. This is not horse racing or anything like that. These are structured techniques that we've used for many years, and we've taught, and we feel it's the best way to export our knowledge into a new trading community. So why do we trade? Some people want more time. Obviously, some people like to create a secondary income or even a full-time income if you're successful at it. But bear in mind, this doesn't happen overnight. We can't teach this in a day, 2 days. You might hear people saying, oh, come to this masterclass, it's going to cost you thousands, you're going to learn everything you know. I'm 25, 30 years in and I'm still learning. So you can't learn this in a few days and a few weeks. Has to be over a period of months for you to sustain and find out what works for you. It's good to be your own boss, and it makes you in charge of your own destiny. At any age we can learn new skills. I think that's very important with the development of the systems that we have these days, especially ATFX's platform. It gives us a good idea to import our algorithms for you to create new skills and give yourself a better education experience. Of course, we're looking for some financial independence. It's good to understand financial markets. I mean, global markets are always in the news. It's good to understand that. Obviously, managing your own money is key. Why pay somebody else to do it? Obviously, you've got your pensions, your properties, your other investments doing their thing, but sometimes it's good to manage some of your own pot. In trading, never put all your own money into this. This is high risk, but we're going to do it in a low risk managed way, because our techniques will only risk probably 1% of your money. If you put £5,000 in an account, we're going to be looking at risking about £50 a trade. So it gives you a good sense of how you can manage your mindset, what you feel like when you're in a trade, so you can all do it in your own time. If you do well, you get a good sense of achievement. We're very critical with our own selves. When things happen and they go well, we never seem to pat ourselves on the back, because that's the expectation. So we need to manage that expectation, never beat ourselves up when it goes wrong. We want to increase our wealth. That's why we're doing it. Yeah, it's good to understand technical analysis strategies, understanding the economic and the fundamental outlook. With our techniques, with the charts, and during this session, the idea is to be able to spot profitable trading and investment opportunities. It could be multi-asset class. A lot of our clients like to use FX. A lot of them like to use equities. How we show you with our ready-made algorithms is they're transportable across all the major asset classes. Even cryptocurrencies, which is at its infancy, we could still look at importing some of these strategies onto those. I think when we are learning, it's good to follow simple and structured trading strategies. Here at ITA, we try to give out what we've learned over many years for you so we can export our knowledge, so you adopt a methodical approach. By adopting that, you're hopefully creating some consistent returns and in a risk managed way. Okay, very important. Probably one of the most important parts of trading is understand how to manage your mindset. We all run around with our head on fire when things go wrong. That's no good. What we need to be is calm and consistent and considered. So when we put on the trade, it's part of a process. We're following it. We're following some rules anyway, so that should take away some of the anxiety, if any, or understanding your psychology and mindset a little bit better. So understanding your mindset and what gives you the edge. So on the left hand side, we see how traders think, and then on the right hand side, how trading actually works. The biggest two parts that we're missing here on the right hand side is continuous learning and trade management and risk management. You can see that's nearly 60-65% of that pie chart there. It's extremely important. I'm still reading books. You know, I'm still conscious about not overcommitting by risk managing and then managing my trades as they go. It's very important not just to set and forget a trade. What I mean by that is you enter a trade and forget about it, go to work, do this, do that, oh, it's won, it's lost. That's no good to anybody. We want to manage that trade. If we're in a really good position and a really profitable position, we want to see if we can get our stop loss to entry at the earliest opportunity, i.e. de-risking our risk in the market and making it a sensible stop loss area so we can maximize our profit and minimize our risk. What should we look for? When starting out your trading education, you need to be aware of many factors such as, and this is what I've done as a professional trader, is how I viewed and looked at the market. So how do you construct a strategy? And then how do you implement a strategy? There's hundreds of oscillators or technical analysis, fundamental analysis, bits that get in the way of when you're trying to construct something. You could take years to go through everything and back testing and looking at what happened before and things like that. So it's very important you understand how you can construct that, and you can do that with our help, with some of our semi-automated algorithms. How to implement it? Well, how do you put on a trade? How do you make sure, well, I've now got my strategy, I'm now going to implement it, I want to put it into the marketplace. How do you do that? Are you confident? What is, you know, how are you confident? How have you made that strategy to put it into the market? You need to navigate yourself around the broker platform. Everybody makes mistakes on the broker platform. You know, you could spend, you know, I've had many clients that they press sell instead of buy for whatever reason, because they don't know how to get round that platform. Again, here at ITA, we can help you navigate yourself around so you don't make the early silly mistakes that can be costly for many new retail traders. Learning the basics of trading is essential because you start from the bottom and you grow from there. You don't run as soon as before you learn to walk. You crawl, you walk, you gain a little trot, and then you can get really pushing hard and building your education and building your proficiency in trading, in analysis, and pushing all those resources together to enhance hopefully your trading performance. You need to know what analysis to use. As I mentioned earlier, all the different oscillators, the different bits that you can look in technical analysis can get a little bit confusing. And we'll have a look at one of the broker platforms, mate, at ATFX platform, the MT4 platform that we like our clients to use because we can put our ready-made algorithms in. How to manage your capital, again, is important. We let all our customers have our complimentary risk calculator, so you're not managing more than 1%, so we would download that for you. How much to risk per trade? Well, typically we risk 1% per trade. As we said, if you've got 5,000 in your account, that'd be £50 per trade. We say between 2.5 to 5,000 because of the ESMA rules and the 30 times leverage. You know, if we're based in the UK, we are with those rules. So we want to make sure between 2.5 and 5,000 lets you get into the majority of instruments that we will trade. So that makes sense. You need to partner with a credible mentor and educator. Hopefully that's ourselves, and you like what you see and what you hear. And it's also good to understand your mindset and how you cope with trading day to day. We all put trades on. Trades do go into a loss area at some stage, but if you've got a structured strategy and you understand what you're looking for and you're being consistent and you're patient, you can have a good idea exactly of what you're expected to achieve. We can help you with your trading plan. It's good to go back. It's good to analyze those trades that you've done before. It's always kind of good to review your trades. Typically, we say to our clients, you know, do 10 trades. Let's have a look at the winners and losers. What was common in your winners? What was common in your losers? Strip them out of your losers. The common ones in your winners, keep them in, and enhance your strategy rules because you know that worked in the past. Typically, with technical analysis, we're looking for history repeats itself. That's one of the main things regarding technical analysis. So this is just a sample of what should be considered. So let's have a look at some analysis. So support, resistance, and chart patterns. So very important, support and resistance is one of the most commonly used concepts, not only in trading Forex, but most other asset classes as well, including the commodities indices, fixed income, and cryptocurrencies. So indices obviously made up of equities. So you're looking at something like Dow Jones, the FTSE 100. You might have heard of the German DAX, very popular indices to trade. They move quite nicely. So it's worth obviously importing and using those or our strategies when using that. So multi-asset class is good. That's diversifying our risk. We're not just holding ourselves up on FX. Just in case the FX isn't performing, we could look at other asset classes, as well as overlaying more than one strategy. Tonight we'll look at just probably one of the strategies that I've taught. But for at the moment, let's just have a look at the support and resistance. So as we mentioned, there are very many different indicators, oscillators that are considered as stop and reverse levels. However, during today's webinar, we're going to focus on the primary three, which are horizontal, trend lines, and EMAs. So an EMA is an exponential moving average, and there are two, simple, an exponential, and we go through those in a second. But a moving average is just a time of pricing, and it kind of gives you a nice straight line that we can look at, and we can use those as within trends and as important areas of support and resistance. Support areas and level zones are priced where a downtrend could be expected to hold due to a number of factors, which include the increasing demand for that particular asset class. Resistance levels are created when price action rises and then sells off. So you're looking at with a resistance trying to hit a ceiling, and it's hard to punch through. We've got some nice examples of those. Once support or resistance areas have been identified, it can provide optimal trade entry or exit points. It's where we call an execution area. As price approaches a support or resistance level, traders will be watching to establish whether it will do one of two things: either hold that level and bounce off, or break through that level and continue in the overall direction. Most trading strategies use support and resistance, and we believe that these level zones will hold. Whether it does or not will in turn create opportunities for traders to exploit and take advantage of. So here's a nice level of, a nice graphic of support and resistance. Can you see very nice horizontal equidistant channel here? Equidistance, what I mean is it's the same distance between the bottom and the top line. You can clearly identify where support and resistance is. So you can go from left to right. You could trade at the bottom of support. You'd be buying at support, selling at resistance, buying at support, selling at resistance until it breaks. Okay, you can see there's been a break at the bottom at the end of it, and that's where potential sell would look. But we remember we've spoken about confirmation indicators and oscillators. We would definitely be overlaying those to give us added probability if momentum is waning and falling or turning in a different way. So what can you take away from that? You can take away that technical analysts use support and resistance levels to identify price points on a chart where price action could hold, reverse, or break out or break down in the direction of the prevailing trend. Human and market psychology plays a major role as traders and investors will review these levels and the market conditions to forecast potential opportunities and future movements. Remember, old resistance can become new support, and old support can become new resistance. The more often price tests a level of support resistance without breaking it, the stronger the level is supposed to be. Okay, so when it breaks, it should continue on the direction of the break. Support and resistance is obviously subjective. So within support and resistance, we mention moving averages. So moving averages are known to act as a dynamic support and resistance level. Whilst horizontal levels are fixed, moving averages are constantly changing, depending on the most relevant and recent price action. Many traders and investors will use more than one moving average, as price can commonly break through by combining two or more. You can create support resistance zone. In one of the semi-automated algorithms that we'll show you a little bit later, I do use moving averages because it can create a good identifying potentially breaks of trend line, support and resistance, as well as a change in direction. Okay, so the moving averages are good for kind of momentum changes, and there's something called a moving average convergence, divergence. Some of you traders would have heard that as a MACD, that can identify that particular style as well. Moving averages can act as and represent good support resistance levels. However, the only problem is figuring out which style type and time moving averages to use. As I said, there's plenty of things to look at. You utilize our experiences and sap our information so you don't have to waste hundreds and hundreds of hours going through the same stuff that we have only to find it to be, you know, it's not something that works within your mindset. There are many types of moving averages. You can take that away. The two most common moving averages are simple and exponential. Simple is equally weighted. So if you've got a 200-day moving average, it's a nice smooth line. The line on a simple moving average, or an SMA, is taking data, or an equally weighted proportion of data. Exponential is what I like to use because it applies weighting factors which decrease as it goes. Takes more weight onto the newest price action, so you do get a slightly quicker moving or a quicker time in the moving average when it crosses. So which is good for us because as traders we want to capture an early potential move or change in direction. Using two moving averages to define support and resistance can create a zone. Okay, I hope that's fairly clear. I'm happy to take questions if you have any. It's not a problem. We're going to move on to trend lines. So trend lines, one of the most underutilized tools within technical analysis, although can be used and can be used incorrectly and drawn incorrectly. Okay, for us, they help create the framework to our trading strategies. If drawn correctly, they can be extremely accurate. So as we said, unfortunately, many traders and investors don't draw them correctly, instead trying to make them fit within the market. Okay, that's not something we want to do. So an uptrend is a line drawn along the bottom of the price action with easily identified support areas, which are also known as valleys. A downtrend line is drawn along the top of the price action with easily identified areas of resistance, which are also known as peaks. What we'd like to see here is 3 easily identifiable touches. Okay, that's standard technical analysis. So remember, we're looking for 3 easily identifiable touches, a little bit of distance apart, not right next to each other, because that's not going to create a good, strong trend. We need it over a period of time, but come along with us and we'll definitely show you how to use those. There are 3 types of trends. There's an uptrend, a downtrend, or sideways, or what people might call as a range movement. When we're looking at ranges, it's just a typical sideways move with the price action not really doing too much, similar to the graphic we showed you on support and resistance. It's not moving up or down, it's just moving sideways for a period of time. So it's how we draw a nice trend line. You can see nice 3 touches there, trend line support, nice and clear. We see an uptrend there on the trend line support, and a downtrend on the right hand side as trend line resistance. So again, nice 3 touches. That's nice and clear, nice and easy. So to draw a trend line correctly, 2 major points, tops or bottoms, to be established and connected. We want to see 3 touches that are needed to confirm a trend line. The steeper the trend line, the less reliable and the more likely it is to break. So we really don't want to see like a vertical trend line. That's too steep. That means the price action has gone too far too soon, in our opinion. But we will show you what a decent trend line looks like shortly. Trend lines are known to become stronger the more times they are tested, just like horizontal support and resistance. And please note, and we've left it a few lines there, trend lines will evolve with the market, and we want to buy in an uptrend and sell in a downtrend. We don't necessarily want to go against the trend. We're looking for trend breaks. We're looking for support and resistance levels. We're looking for support and resistance level breaks as well. All those will give us added probability depending on the market structure and the price action. But this is something you will get used to as you go. So utilizing chart patterns are considered one of the most effective trading tools within the trader's armory, especially within our ITA community. Chart patterns repeat themselves in the market time and time again, and once understood are relatively easy to spot. Chart patterns are formed of pure price action and form the basis of underlying bullish, that means going up, and bearish, going down, pressure. The ITA community use chart patterns to identify continuation or reversal signals to execute our trades and identify potential price targets through forecasting. So it's very, what we're trying to say here, we must prepare ourselves, okay? Fail to prepare, prepare to fail is the good old adage. So we need to make sure we're doing our analysis correctly, and we need to make sure we're doing it regularly. Yeah, it's no point just jumping in and out of something. Let's find a consistency and a structure within your trading plan that works for each and every one of you. So the ITA pattern blueprint, we focus specifically on the most common patterns utilized within the ITA community. This blueprint will provide you with the patterns you should be keeping an eye out for as you continue your journey throughout the content and to becoming a consistently profitable trader within the markets. Yeah, one thing I say, it doesn't happen overnight, okay? We're definitely not here to show you fast cars and things like that and a potential lifestyle. We're here to show you a process, the process of what you can do if you apply yourself, if you dedicate and you have the desire to be a successful trader. Learn your craft and obviously the rewards will follow. There's no guarantees in anything. So what we want to do is show you the technical analysis, because we can't rely on just a signal provider, we can't rely on just an algorithm. By fusing a semi-automated algorithm as well as our manual analysis, we give ourselves added probability to becoming a consistent profitable trader. So here we look at bullish and bearish flags. What we mean, continuation patterns are patterns that are moving in the same way as the underlying trend. Okay, the formation of continuation patterns is noted complete after price action breaks out and continues in the direction of the prevailing trend, as said. So we want to see on these flags and pennants, or these are more flags, we want to see a sharp movement up after the bull trend and a sharp movement out of a downward bear trend. Okay, so we'd like to see that. That would be standard. If it starts messing about after that, we would use our discretion and we would trade out. We would trade in. We know at the moment we've got a dollar CAD position on. We know tomorrow the FOMC is highly likely there is. We're expecting a 0.25% cut in US interest rates. We're long at the dollar. We're standing at break-even levels at the moment. So we want to get out of that beforehand, because if they do, you'll see a little push down on the dollar as it's disappointing. It really depends what the rhetoric is after that, if they're going to talk about many more cuts throughout the year. If it's just one cut and the rhetoric is that we don't foresee any future cuts this year, you might see the dollar stabilize and even maybe have a little push up. So we know there's a 0.25 cut in the marketplace. It's really the rhetoric after that. You might hear someone saying, oh, that's a dovish tone. So that's a softer tone. So that means rates will be coming down. If it's hawkish, it means rates should be going up. So watch out for that. It's the FOMC Chairman Powell will be talking and probably looking at the small cut in US interest rates tomorrow evening. Chart patterns, again, something, an expanding wedge, looks like a megaphone or whatever you want it like. And again, once it breaks out of the price action, we can then move and enter a trade. Again, we're looking for the prices to move sharply out of any resistance or support zones. We have ascending and rising wedges. Okay, it's traditionally and typically known as a bullish continuation pattern. However, within the ITA community, we can utilize this as a potential reversal pattern, especially in some of our maybe the lower time frames as well, for a good considered entry. An ascending rising wedge is a downtrend. It's considered bearish. again, we can use these signaling reversals in trends directions. So it's very, very useful to understand what the pattern is, how we can implement that within our trading, again, for added probability. So this is what a descending wedge looks like. Obviously, it's going down. You can see, we're in a downtrend there, but when we look for the breakout, that will be signaling a reversal. Okay, so if that happens, we can use these patterns to create opportunities to get long, to go short, depending on which pattern it is. And based on the price action and really what the market structure is. Ascending equidistant channel. Equidistance means the distance between the two parallel lines. They are the same distance. This ascending bullish channel is typically and commonly known as a continuation pattern within the uptrend. However, again, in the ITA community, we can also use this to identify a reversal in these patterns. Elaborating further, an ascending channel in an uptrend for the ITA community is utilized both as a bullish continuation and a bearish reversal, giving us added or more ways of reading the market and potentially better entries as we move forward. In our community, the ascending channel can be used as a reversal pattern, allowing us to potentially capitalize on large risk to reward setups, especially based on our trading strategies and style within our risk managed and execution types. Very important not to overcommit our capital. It's very important when we're in a trade to manage that trade and run it as best as possible. When we look at a descending equidistant channel, this is known as bearish, descending going down. And again, similarly to previous slides, we can capitalize by using it either as a reversal, or we could use it within the trend. So either way, it's either a continuation pattern or a reversal pattern. So another two possibilities of added trades that we can put and we can do. Again, looking at the market structure, looking at what's happening to give us the added probability in a risk managed way. So we have a webinar offer for this evening, 6 months partnership, access to our strategies, unlimited access to our midweek market review. We do a recorded webinar where we go over all our strategies and the open trades with you. If you're interested, just drop a note into the chat, and I will put some links in here where you can apply and some other bits like that. You'll see our weekly and daily market analysis are very important because we offer a daily email giving you an update on where we are, typically out between 9:30 10 o'clock UK time. Everything's produced here from our hub in London. We do have a Munich, soon to be Madrid office, as well as some other locations. So we've got plenty of traders within our community everybody can talk to. We have a pro trader Skype chat. So what we do there is put all our trade ideas, our analysis, our chat, any people got any concerns, they can talk to us. So it's very real time. You've got live London trading floor access with Kevin and myself. Obviously, we mentioned the email correspondence every day, plus you've got email, you can email us, things like that. You can have online, remote, or face-to-face individual assessments, as well as other coaching packages that might be available and suitable for you. Okay. Before I go on, I will mention the other bits of the offering after we've just had a look at algorithms, because I have mentioned those, and it's something I'm keen on, but I don't rely on. Basically, an algorithm is a nice way of putting in a certain amount of rules for the market to hit, and then off we go. Okay, so once the algorithm is hit, we analyze and do some manual analysis, and then obviously we might get some false arrows pop up. We don't trade just on the trigger. We use our eyes to execute after we've done our manual analysis. So extremely important not to be just a trigger junkie. As soon as the trigger out, I've got to hit it. You've got to do your analysis. You've got to learn in this. If you do that, you'll stay in the game longer, and you'll be able to do this, for a long time without blowing any account and understanding, some serious technical analysis techniques. You know, we've all heard of Warren Buffett, you know, probably the best trader in the world. He's written books on how he does it. Unfortunately, nobody else can copy him because, you know, they don't have the finances, and he's been in the game a long time. So he's doing something right. So let us share what we feel is right, so you're in the game a little bit longer. Okay, so by creating some automated rules, we can program these into an algorithm using ATFX as our broker on their MT4 platform. It's very easy for us to do. And we've got many clients using this. We don't, you know, and what we want it to be is a nice seamless execution, which is what we get. These need to be back tested, which we have, and then shown how to implement into your trading system. There's no point us just giving you a USB or whatever it is, a downloadable platform. We want to teach you how to do it properly. Hence to say that's why we don't run master classes. We don't run, we don't sell 3-day events. It's not like that. Our courses are low priced but increasing in length. So, all right. So my aim when we started Intelligent Trading Academy was to because I looked at the marketplace and saw all these lifestyle sellers jumping around on the stages with, you know, fire coming up, selling you the dream, not the real life process. Okay, so let's be realistic. Let's look at the process and let's educate you in the stuff that we've seen in our experiences over the years that we've been doing it at major investment banks, other investment institutions. Let us export our knowledge to you so you don't make, you know, the silly mistakes that, yes, I've made and lots of other people do if they're not taught properly. So let's have a quick look at an example. So here, this is sterling yen. You can see on the left hand side, just a blank chart looking very, not sure what's happening there. If we look on the right and overlay our analysis, you can see some arrows here with part a semi-automated algorithm. Okay. First thing we've done is highlight a resistance area. Okay, extremely important. We understand at 148.85.90 level, this pair really struggles. And do you remember what we said earlier? The more times it touches, the more likely it is to resist. It's going to break at some time, of course it is. Yeah, but the more likely it is, the stronger the resistance area. And we've put a ribbon there, a band, because we know one vertical line is not. It's there or thereabouts in that resistance area. On top of that, can you see those black lines are trend lines? Again, nothing's ever standard, but they are quite nice and not too steep. They are nice degrees and nice in construction. Looking for 3 touches. Okay. When we look at our entry points, you can see I've put a vertical line in. Okay, so we've had 4 decent trades there, 4 winners. Look at the opportunities that we've had. Okay, there's look at the opportunities that we had. 4 decent opportunities over a period of I don't know, 12 months. Could it be 12 months, 8 months? But we're not into scalp trade. We're in for the long term. If we're in a good winning trade, we want to stay in a winning trade. So that's what we're going to, you know, that's what we're going to be doing. Okay. So when we look at that, and when we show you the analysis, we're going to be showing you these techniques. Plus, we will be in the trade as well, because we are traders for and foremost, because we know that's where we make our money. So by structuring our algorithm and then by overlaying our manual analysis, you can see how enhanced the probability is. Not every chart's going to be the same like this. It's all going to be different. Where do I take my trend line from? I've got to do it from here. But we'll teach you and we'll identify the best possible areas which we think will benefit us when we're trading as a group together. So we'll all be doing it together. If we're winning, we're winning together. If we're losing together. Don't forget, we will have losing trades. But if we can win 7, 8 out of 10, our portfolio and our money and our account will be growing. Okay, so today's offer is 6 months education partnership, access to our trading strategies, unlimited access to our mid-week market review, weekly and daily market analysis, trade ideas, pro trader Skype chat, so the chat we talk to in real time, and we look at all that as we go day to day, and we manage our trades and put trade ideas out there live as well. You've got trader email correspondence to us, as well as the email you'll get every day, and the opportunity for an online or face-to-face assessment. You get a free setup session in-house or remotely. We work with clients all over the world, so the remote part is just as good as the face-to-face if you can't get into our head office here in London near St Catherine's Dock. So we're near Tower Hill, so quite very easy access to get to if you are in the UK. Also, you get a bonus offer tonight. You would get our free Ultimate Forex Guide, which was written by Kevin and myself. They are PDFs, so we pop those in an email for you. You'd also get our pattern blueprint, and we would put that in the email for you as well. That's all part of what we are doing. Okay, so our exclusive webinar offer is 6 months education, as we've all said. Okay, with our bonus offers, usually it's $2,995 plus the VAT. For this evening, it's only $595 including the VAT, so it's $595 all in. Okay, unfortunately it is limited, so we don't have loads of places to go, and it will be on a first come first served basis. So our offer for the webinar is this. Okay, if you'd like to register for this offer, I will just drop that into Skype for you. The link here, and you can sign up at your leisure. But obviously they are first come first serve, and obviously you'll understand that once they're gone, they are gone. So I shall put that link into here, and that's for your 6 month program. Okay, you should be able to see that. It should have gone into you. You should get the link. Okay, and it's obviously also important to remember that we're dealing with a good FCA regulated broker, and we want FCA regulation because it affords us the regulatory protection that we need. Okay, they're UK based, it's low and competitive spreads at ATFX. They're part of the FCS scheme, compensation scheme. You've got a deposit in your account up to 80,000, I think it is, roughly at that amount. You're protected. Segregated funds, you're looking at funds that are not in ATX bank accounts, but they're in large like Barclays, NatWest, high street banks. So if that brand failed for whatever reason, your money is safe or in an FCA regulated UK bank. They're fast and safe deposits and withdrawals, so if you need to put some money in quickly, you can. If you need to withdraw it, you can. And obviously, dedicated customer service. We work very, very well with their desks, and they're very competent and efficient when using talking to customers and overcoming any issues they may have. So anybody wants to obviously open the account, that's the link that you would need there. Okay, so if you want to join our 6 month FX Pro course, your link is there, and that will be up for a certain amount of time, as well as if you want to download the ATFX account, so you can upload our algorithms when you have your setup session, that would be great. Just before we wrap up for this evening's session, as our 45 minutes is nearly up, I just wanted to go through what the platform would look like, because I did promise you that, and hopefully you can all see what's going on here. So this is one of my platforms here. Yes, I'm using MT4. This is the Dow Jones 30, so the US 30s, it's highlighted here. Can you see our algorithm here has kicked in quite nicely? 2 opportunities. I've had 2 opportunities since April. Okay, as I said to you, we are not scalpers. We are considered traders, and we will run trades as long as our analysis and our platform, our algorithm tells us, in conjunction with our manual analysis. So how we worked out this sale here was we saw a cross of momentum. We've got other indicators here that we need to look at, but we would tell you those. I would draw a nice downtrend. Do you remember we want 3 touches? Yes, Adrian, I remember. And we've got our 3 touches. So that is our opportunity. All that move there, basically from 26,153 at the low of 24,780. That's how we've got there's plenty of money in that. We can do that. Look at the last one when we went long. Say we went long at 25,694. It's now at 27,200. So plenty of opportunity. Even that's probably a 4-to-1 trade. So if you put on if you're risking £1,000, you could be making £4,000 or £5,000 on that one trade alone. Okay, so you must structure your ideas, you must do your manual analysis, and you must continue to learn and evolve with the marketplace. There's probably another couple of trades that I might be able to show you. If you bear with me 1 second, I'm going to drag the screen over from another side. We've had a really nice trade here in Kiwi Swiss. Okay, and do you remember we mentioned about the moving averages, this long yellow line here? We've told you about support and resistance. Okay, resistance, bang, off we go. Our algorithm's kicked in. You can see I'm in the trade. That's it. The momentum is turning negative. Why did you sell that trade? Our short-term trend was broken around about here, and also it's going to let me put that in 1 second. Bear with me. This level here, full of resistance, 200-day, couldn't even break it. If the candle had closed above, then it could be a different story, but we assume, and because history repeats itself, it's hit it and it's come down. Momentum has changed from a buy. Look at our last buy signal. Yes, thank you very much, you're welcome. And you can see here the trend was broken. At the same time our buy kicked in. That was our opportunity. We would know this level here because it's standard that the 200-day moving average could be support or resistance. So in this case, it would be resistance. And we can see, okay, even if I'd bought it there and sold it here, we'd have still made a tidy sum. Okay, now we're short. You can see where I've entered there, this level here. We're below the entry. One thing we haven't done is put a target price in because we want to make sure we are maximizing our profit. What we will do is be moving this stop down to entry at some stage to try and maximize our profit and minimize our risk. If I pull this down to entry, worst case scenario is I don't lose any money. So we have to be proactively risk managing our trades at all time. Okay, I think I've gone on for long enough. Happy for you to either, you can email me directly, and my email address is, and I will put that on the Skype for you, no problem. Let's get the presentation back up so you know we're all singing and dancing. Okay, so I will put my email address, my direct email address is adrian.slack@Intelligent Trading Academy, nice short one, .com. So please, hopefully I've spelt it correctly on here for you, looks like it. So you can email me with any questions that you may have, and happy to answer and help you get on board. Is anyone I know we've had Amabella, Joseph interested, so that's fine. Is anybody else? They could express their interest and I'll make a note. One of the things you have to do is read our disclaimer, and this information has been produced by Intelligent Trading Academy Limited for general information purposes only. It's not indicative of future results. AT Global Markets UK Limited, ATFX UK, takes no responsibility for its accuracy or completeness, Any opinions expressed do not reflect those of ATFX UK. This information does not take into account your personal circumstance or objectives and should therefore not be interpreted as financial investment or any other advice or relied upon as such. You should seek independent advice before making investment decisions. Reproduction of this information in whole or part is not permitted. The risk warnings: CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 72% of retail investor accounts lose money when trading CFD spread betting with ATFX. You should consider whether you understand how CFD spread bettings work, whether you can afford to take the high risk of losing money. And remember, you only want to, you do not. It takes a long time for us to earn pounds, shillings, and pence, and we don't want to give it away. Join us so you can create a stable or a less risk trading strategy. So because we're only risking a small amount of your pot, and we want to help you by inspiring, guiding, so you can evolve into your trading journey. Okay, so happy. I hope everybody's happy. I hope you've enjoyed the session, and I hope you're tuning to the next one that the ITA will be doing. That'll be myself or Kevin. You are talking to the real traders, so any questions you have, we'd more than love to be able to assist. Thank you for the emails and the people I can see have signed up already. A few spaces left. I'm sure they'll be available for the next few days or so. But please, if you are wanting to come on board, please click the link and get involved as soon as you can. Very appreciative of your time and look forward to working with some of you. Again, if you have any questions, please just email me directly and I'll happily respond as soon as I can. Once again, I thank you for your time and I wish you all safe journeys home. If you're home already, I wish you a very good evening, what's left of it. All the very best, and I look forward to seeing some of you very, very soon. Enjoy your trading, enjoy the rest of the week. Take care, everybody. Good night.